I am going to begin with the disclaimer. The lawyers make me do it and I have to do it. We like to trade the stock market, and that means we can lose all our money. And we always have to remember that. We should never trade with more capital than we can afford to lose. So I have to show it, I have to read it just to make everybody happy, that nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Past performance is no guarantee of future performance. Our email address is care@financial.com. So it's a little play on the word financial. All right, so that is out of the way. Now the regulators and everybody else will be happy. So again, it's great to be here. I was here a couple months ago. We had a great response. Renee, your folks are very active, and that's fun when people are actually asking me questions. If you guys want to ask questions as we go through this presentation, please feel free to do so. I can read what's going on and also answer at the same time. So I'm just going to pop the little chat box out here. There we go. And this will be perfect. Awesome. All right, we can kick off. So again, the disclaimer's been there. If I ask you guys a question as traders, what's the #1 challenge that we face walking in to the next trading day? Do you think it's probably fair to say that no matter how much work and effort that we put in, when it comes to actually pulling the trigger on the trade idea, it's still no better than a 50-50 coin flip? Do you think that's a fair assessment? You know, it's like, geez, I've done all this work. I spent all this time this past weekend without not spending it with my wife or my husband. I could have been with the kids or walking the dog, but instead I did all this research, and still no better than 50-50. What if I told you that we could actually change that? And we can use the stock's own historical track record as our secret weapon, which, by the way, is exactly what the institutions do every single day of the week. So when we built Financial, and it's financial.com, we wanted to make things really easy, really simple, and save everybody a whole lot of time. So in the next 60 seconds, not minutes, seconds, I'm going to show you the hottest stocks for the week ahead. You ready? This is what we're going to do. We're going to go to Financial, and if we go to the outside page, it looks a little like Google, on purpose. Let's just go ahead and type in the spiders. Any stock symbol will work. We instantly get taken inside the site. We're then going to go to Screen. We are then going to click on Seasonality. And then I have some choices that I can use. I'm going to look for stocks that are going to rise at least 5% or more over the next 13 weeks. I use that figure pretty much as a base point because that's about 3 months worth of time. The number of years, I want it to be at least 70% accurate, that it's going to go higher. Now, I know what you're thinking. Why can't we make this be 100%, right? Well, very few stocks actually have 100% track record. Most don't. So let's just not get, let's cast a big net. You know what I mean? Let's see how many fish we can catch initially. Then we can whittle it down. If I click on advanced filtering, I can look for a specific set of share prices. Now I'm just going to say 20 bucks or more. I want to keep out the littler guys. And minimum number years trading history. I do think this is probably the most important criteria. If we talk about Tesla or Alibaba or Facebook, Twitter, they've only been public a few years. And let's put that phone on vibrate. So they've only been public a few years. It's not fair to give them a true assessment of, hey, does this stock move up by X amount of dollars over a period of time, year after year? The market has just been going up the last couple years, and even a blind squirrel can find a nut once in a while. So if you think about that, let's get stocks that have track records of at least the last decade, because that is going to encompass back in 08, 09, right? That'll at least give us one good down flush in the market. So if I come in here, select minimum 5% or more, rising higher, minimum 13 weeks or 13 weeks out in the future, So minimum 5% rise over the next 13 weeks, 70% of the time, minimum share price 20 bucks, minimum number of years 10 that it's publicly traded. If I come down here and hit this one button, all of a sudden we now have the list of the hottest stocks over the next 13 weeks. And we are using the stock's own data against itself. How cool is that? You know what's even better is if I scroll back up, and we're going to talk more about this, I can come in here, I can hit save. I can give this a name. Let's call this we'll call it the Renee Special, since Renee's been so kind to be the moderator. We'll call it the Renee Special. We'll hit save. Renee, now you're famous. Every time I come to this page, all these settings will now be here. So if you said to me, after you set those little buttons up, what was that? 1 click, 2 click, 3 click, 4 click, 5 clicks? Every time we come back here, within about 3 seconds, we're going to see exactly what we want every single time we log in. Now, if I scroll down, let's look at those stocks again. And you know what? If you want to, you guys can take a picture of this. All I ask is you keep it for yourself. Please do not share it. What are some stocks that we see here that have these amazing gain-loss records? Well, I see Amazon. Let's write that one down. Baidu. I've traded Baidu in the past. We know that one. Let's see. Dollar Tree. That's pretty cool. No Dollar Tree. There's actually Quest Diagnostics, DGX, and that's even Shutterfly. Now I could come up here and actually make this 50 per page, but I really want to stop once I start getting below double digits. Why? Because I think there's plenty to pick from above double digits. So why do I need to go, that low? All right. And there's even Republic Group and EW in here, Edward Life Sciences. So far we have about 4 stocks. I will add EW. That'll make it number 5. All right. Well, now we know that, hey, they have at least 70% accuracy, or what I call hit rates. They have pretty impressive track records. Let's go take a look at some of these independently. So now what I can do is I can come up here, hit search, hit seasonality, and I can type in any one of your stocks, which I'll be happy to do later. We'll have plenty of time. But I'm going to type in some of the ones that we just talked about and we just looked at. Let's say the first one I want to take a peek at is Dollar Tree, DLTR, a retail stock. It's not as expensive price-wise versus Amazon. Now I'm going to move this cursor to 13 weeks, and I want to tell you how this plays out. The left side is what the stock has done. The right side, that little dashed line, that is the probabilistic future price. We're predicting where the stock's going to go. That sounds a little funny, right? Well, it's not we. It's just the stock's data. Throughout its history of being publicly traded, this is what the stock is set to do over the next 13 weeks. On average, it might do more than that. It might do less than that. It might go down. So how accurate is this? Let me scroll down a little further. Check this out. Over the next 13 weeks, the Dollar Tree has on average historically risen by 14.6% over the past 22 years of being publicly traded. Furthermore, Dollar Tree has risen higher in 16 of those 22 years over the next 13-week period, which corresponds to a historical probability of 72%. So in simple terms, 72% of the time, this stock goes up by 14.6%. So 7.2 out of 10 years, that's another way to look at it, the stock goes up 14%. That's pretty good. Well, you know what else is really cool? If I take my mouse and I go back up there to the 13-week tab, here's what I like to do. I like to go left and right a couple weeks. Let's see if we can get that figure. Holy mackerel, it just changed. It's now 86% accurate at week 12. Week 11, it's 77% accurate. Week 10, 81% accurate. That means if we're holding this stock now for 10 weeks, it goes up 8 out of 10 years. That's another way of looking at it, right? That's pretty cool. 9 weeks, 77%, 8 weeks, 77. Okay, what happens if we go beyond 13 weeks? 72, 77, 72. It starts to drop off. So what do we know? We know, where was it? 10, 11, 12. The 12-week period for Dollar Tree is right 86% of the time. And it's not just going up, it goes up 12.5%, period. Now, how do we get this data? Okay, if you're an engineer, you are going to love this. There's nothing proprietary about this data. We've taken all the data in the market. We've spent an extraordinary amount of money building this site, way beyond 6 digits, to make it on command. You type the stock symbol in, it will spit out what it's likely to do based on its history. It's just data. It's not me giving some kind of special valuation to that data. As an engineer, you're smiling ear to ear. You love it. It's just show me the data. I don't care what you think, Ron. Hey, Ron, you might be a nice guy. It doesn't matter. And I don't care what you think. I don't care what my friend thinks or your friend thinks. It's unbiased data. Can't argue with it. So we check our emotions at the door. We check our opinions at the door. We check the analyst upgrades at the door. We check Zach's at the door. Whatever we might be using out there, FinViz or whatever wonderful software that exists. This is just data, and now we can make the decision on what we might want to do. So I want to ask you a question, if you're willing to play along. When is the last time that you got done spending hours of research and got ready to pull the trigger on a trade? And you had this kind of confidence that you could say to yourself, you know what? Over the next 12 weeks, this stock goes up 12.5% with an 86% chance of it happening. I would say never. Well, that all now changes with financial. You no longer have to walk into a potential trade idea saying, well, I think it's a good one. I paid for this service, or it's a free service, or I did my own research. There's your data. Could you imagine wanting to trade Dollar Tree or actually wanting to trade this stock? It's like, which would you rather trade? Here's the Home Builder ETF. Check this out. The XHB has fallen lower in 7 of its last 11 years of being publicly traded, specifically over the next 12-week period, by an average of 6%. Isn't this amazing? If we come in here and we type in Dollar Tree, what do we see on a 1-year chart of Dollar Tree? And by the way, this is Thinkorswim daily chart. Dollar Tree looks like it's been going down and pretty much nowhere for quite a while. How about XHB? Oh, it's been an uptrend for a while. All of a sudden you're thinking about, maybe I want to go long XHB. And then you come in here to financial and you say, holy moly, this is actually not the best time to consider buying XHB because it actually has a poor track record. Now you can see over the next couple weeks, 2-3 weeks, there still is a little bit of a bump, but then it gets really ugly. So if I'm long XHB, okay, if I'm long XHB, I have about 2-3 weeks yet for that potentially to play out. And in 3 weeks, I want to head for the exits because this is what it does historically. It's not me saying it's going to go down. It's the stock's own data saying it's going to go down, most likely. There's no guarantee. But having this kind of ammo, this kind of research available to me is priceless. And then I compare that to Dollar Tree and we know how that played out, right? And Dollar Tree is just the opposite. This is the information the smart money has. You might say, well, how is that true? How do we know to believe you, Ron? 2 things. Our team has worked with billion-dollar hedge funds. We had to sign NDAs. We're fully aware of some of the information that they get access to. Number 2, even if there was 1,000 of us here today or 2,000 of us here today, and we all tried to buy Dollar Tree right now, could we move that market? Maybe, I guess, right? If we bought stock, how much do we move that stock? A couple pennies? Could we move it maybe 50 cents or $1? I guess that might be possible. But could we do that for the next 12 weeks? and make it go up 12%? I would say no. Very unlikely, right? So why does a stock do this? Because the big money comes in year after year after year. They're the ones that have the billion-dollar funds, the 10 billion, the 100 billion. And when they come in, they can't come in today and just buy up their million shares or buy up their 500,000 shares. They have to layer these positions over days, because if they try to do that all in one day, they move the market, everybody else sees what they're doing, they end up having to pay more against themselves. So they're going to try to be a little stealthy about it and sneak in there and move it higher. A perfect example of how this big money works is check out Disney. Okay, look at Disney in May all the way to October. Now the market was actually doing pretty decent last year. It didn't have a bad year, but Disney had a bad May, June, July, August, September. It didn't do diddly, it just went down. And then all of a sudden it turned higher. And no one's paying attention to the mouse house, but we told our members and anyone willing to listen, in October and November, Disney is one of the strongest seasonal stocks you're going to find. Is it perfect? No. Is it accurate? It was, I think that percent was 83 or 86% accurate over the next like 16 weeks. And it went up by like 15%. It was insane. It was absolutely nuts. And some of the members in the session said, yeah, but you know, it's going down. I'm like, hey, it is. Let's see if this seasonality crap pays off, right? And by the way, seasonality could be called sector rotation. You've heard of that, right? So there goes Disney, Disney. And then it magically starts rising, right? Check this out. There we go. I'm going to type in Disney. And this is going to blow your mind. I'm going to take this little cursor. I'm going to go out 52 weeks. I'm going to take a snapshot. I'm going to zoom in so we can all see it. All right, can you guys see that pretty good? Is that a good size? Can you tell me when the best time and when the worst time to own Disney is over an entire year? Do you know what that cycle corresponds to? When the kids are out of school and they're all at the theme park, the average retail trader thinks, oh, it must be a good time to own Disney. It's exactly the wrong time to own Disney. It actually trends down historically. When is the best time to own Disney? When the kids are back in school. If you own Disney stock, right now this is absolutely priceless information. You know that if you're going to hold Disney over the summer, historically, it's not a good time. So if I had Disney stock and I couldn't sell it, over this down period between the red arrows, I'd have to think about collar trades, long puts to protect those shares, and definitely covered calls. And when we get to the end of October, I strategically decide to start to become a little bit of a piggy, a little bit of an oinker. I want to try to maximize that money on a historical basis. So I know that when we get into the end of October, this thing should start to rally. Well, lo and behold, isn't that exactly what happened here? Because this is what we were showing our members, and this is the beautiful part. I have recorded webinars, and this isn't me, by the way, this is not me saying it. This is the best part. It's just what the data does. So here's Disney, and we're in here, and I'm like, wait, we're just going to wait for volume to return. And at the end of October, that shows us the big fish, or I call them the big piggies. They're coming back to the trough to eat again. We saw a spike in volume. That was the first sign they're coming back. But we were still in a downtrending channel. So a more cautious trader might say, you know, I'm going to wait until we break out of that channel. Or maybe I'm going to wait until we set a higher high. So watch what happens on this daily chart as I move to the right. Uh-oh, boom, right there we popped. A couple days we popped above the channel and we even closed above the previous high. There's the trigger. However, we had some people say, Ron, earnings are coming up. And you always taught us that earnings are crapshoots. I'm like, you're absolutely right. They are crapshoots, because if we actually know how that earnings report is going to be, good or bad, we would go to jail, right? So we can't know ahead of time. But we know that on that previous chart at financial, we know exactly what's going to happen. The stock starts ripping higher. So we wait till after earnings. Boom, there's earnings. Magically, the stock goes up. They were buying this stock right in front of the earnings report. They're not morons. They're not dumb. They know this is when the stock goes up. All of a sudden, earnings reports, while they still are coin flips, let's face it, right? But are they? If we start using seasonal analysis, we can start to get a bias based on the seasonality of when they report. And you might say, well, maybe that's just because they had a good report and there was this Star Wars thing. I'm like, that's a great argument. However, Disney's been publicly traded for over 3 decades. This data had 3 decades. That's multiple presidents, Democrats, Republicans, different crises. You name it. There's always something out there, debt ceiling, blah, 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 right? And yet the stock still seems to do this 80-some% of the time. So what we said to some of the members is, let's follow this on paper. We can establish half the position ahead of earnings and the other half after earnings. And look what happened. After earnings, we pop higher. And what happens to Disney? It just keeps going and going and going. The joke is that Disney's the Energizer Bunny. Now, if you're unfamiliar with some of these moving averages, I haven't told you what they are unless you've seen them up here. I just use standard moving averages in the industry. They are not proprietary to me. I want to make sure everybody can follow along. So this red line is your 20-day EMA, and our traders, our members, are following this. And until it closes below the red line, it's long. Look at how the volume came in before and after earnings. They bought it again here. 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 This is not you and me. So if I trade Disney, I can still be long up until the next 2 months. So what would happen if I go out about 8 weeks here on Disney? What's its hit rate? It's starting to get a little less. Remember, back in October, November, I told you it was 80-some%. Now we're dropping into 60%. It's running out of room. 6 weeks, even then it's starting to drop. So we're telling our members, listen, that 20-day EMA to me is golden. If we close below it on an end of day basis, the ride is over. You guys saw how the S&P and the Dow have been doing. They've actually been setting lower highs here recently. It's been a choppy range pushing to the downside. Disney just keeps powering higher little by little, couple pennies, couple bucks each and every week or month. It's just amazing. But again, we get to here, it's time to start taking profits. We now shift away from Disney if we don't want to be short, and then look to get long again in October. So what does perform well over the summer? Just FYI, you can write this one down, eBay. eBay's a good performer over the summer. And this is what the big money does. It just goes from this group of stocks or this stock, it then goes over here, and then it goes over here. You know, another group of stocks, this one was Adobe actually. And we're going to look at some trade ideas here again. I love to see stocks that are doing this. Here was Adobe. Remember how the election stocks got so bullish, right? Adobe never had that. Someone said, well, maybe Adobe's not going to work out. Like, well, maybe not. And that's fine. I'm not going to blindly take a trade idea based on seasonality, because this could be the one year it doesn't work, right? Let's be real. So all we're going to do is wait for a break of a previous high, break of a trading range, and at least have average volume. And there she goes. Adobe goes from 108 all the way up now to almost $130 a share, and the same thing as the red line. Here's what I like to say to folks. How many times have you looked at a stock chart just like Adobe or like Disney, and you said, stock's going nowhere. Why all of a sudden does it seemingly shift? And then it just grinds higher as if there's no problem in the world. It happens to me all the time. I see it on stock after stock after stock. Well, that doesn't need to be a problem anymore. Now it's an opportunity. We can use financial, find these little suckers, and when they start breaking, that can be our trigger to go long. And going back to Disney, just showing you that chart, you now have biases for the earnings reports. It doesn't matter what Disney reports over the summer. They might say the theme park sales are through the roof. They might say that they've never been busier. What does the stock do? Over 3 decades, it just goes down. What does their report in October do? Whether it's their worst report or their best report, stock historically just keeps going up. Earnings all of a sudden may not be complete guesses after all. How funny is that? Same thing with Adobe, same thing with Applied Materials. This was another one. December and January, and then off she goes. So enough about that. Let me show you Dollar Tree again. And let's go look at a trading idea. So if I wanted to trade Dollar Tree, we've already established that 12 weeks is the sweet spot, and it goes up 86% of the time, right? How could I potentially trade this? Well, the first thing I'd want to do is let's go to a chart. I love reading charts. I think it's fun. You might think I'm a little crazy. I am a little crazy, but you know, let's zoom in. Before I do, by the way, what do we see on this chart? Isn't it like a big fat trading range? Yeah, sure is, isn't it? If I zoom in pretty close, I see a low here. I see a low here. And then I see some highs. So if I know that Dollar Tree is about to enter an 86% window of at least it goes higher, it could just be by a penny, it could be by $1 million. We know the average was pretty astonishing, and it was double digits. So what I can do here is I can set an alert for $80 if I want to be left known by my, what my broker tell me that it's above 80. If we get above 80, where's the next resistance? The previous highs. Now that purple line is the 200-day moving average. It's a simple moving average. It's an institutional moving average, but it doesn't really pay much attention to it. So we aren't either. If this gets above 80, the next target's 90. If we assume a $10 move, that could potentially be an extraordinary return. And we know that because of our data, that it goes up about 12%, 86% of the time. So what's 12% of 78 bucks? Well, it'll be at 80 if we try to follow along. What's 12% of 80? About 10 bucks. 10 plus 78 is 88. And ironically, it's actually going to take us up there. So that's where we expect the stock to be, up in the upper 80s over the next 12 weeks. And what would stop me out? Once we close above 80, I'm going to use that red line. Every brokerage is going to have it, a 20-day exponential moving average, EMA. And if we close below it end of day, I stop myself out. In terms of potential profit targets, if I do a long call option, which we're going to look at next, I can do 20% profit on the first leg, 100% profit on the second leg, and then be an oinker and try to squeal all the way to the bank on that third one. And as you saw with AMAT, Adobe, Disney, those are all still working. It's an extraordinary way to trade. It really does sort of lift the veil off what the institutions know. They do not want you and I knowing this. They don't want you to know that this is what they do. They go by the same dang stocks the same time of year because they're the ones that have to push it. It's not you and me being the sole driver of that move. It's the big money. All right, so let's go look at a potential trade idea on Dollar Tree. Now here's how I play this, or I like to teach how to play it, because we actually can do whatever we want, right? I like to take the time we were looking at, which was 12 weeks. That's essentially 3 months. That's 90 days. And then I want to add 30 days to it. So 90 plus 30 is 120. The reason I want to do that is the time decay aspect of options. Options decay naturally every day. It's theta. They joke that there's a couple things that are guaranteed in life: death, taxes, and theta. And theta is its most noticeable in terms of decaying in its final 30 days. So if I want to hold this trade idea potentially for its best ownership period, which is 12 weeks, I'm going to go 12 weeks plus a month, 12 plus, 90 days plus 30. So we end up at 120. And I'm going to pick the closest expiration month to 120, but I'm always going to default just a little more if I have to. I don't want to come in, and that's going to be August. So if I come out here and I look at August options using Thinkorswim, there's a couple choices. I typically like options that generally have at least 200 open contracts. That's just a personal number that I like to use for liquidity. It's not scientific by any means, but I also see that there's a lot of open interest. 1,243 contracts at strike 82.50. This is probably the strike that I would consider when and if the stock closes above $80. The bad thing, there is 50 cents bid-ask spread. That's a bit of a challenge. So what I could try to do here, I like bid-ask spreads of like 20 cents or so. I could try to take a dime off this and see if I can get filled at 370 or maybe 360. I don't know if you're truly going to get the mid. There's just not a ton of people trading this type of contract with this much time on it. This isn't like the spiders or Apple where as long as it's a reasonable quote, you probably get filled. That's not exactly Dollar Tree here. It's a longer term option, less people trading it. So let's just assume that we get filled at 380, right? The worst price. If this stock were to move up $10, I could actually go to strike 72.50 and say it would be worth 860. However, there's a big asterisk on that. That's if it happened in one day. You go from paying 380, you're going to make about $5 a share. Yeah, but there's going to be time decay. If it actually took, let's say, let's have some fun. Let's just say, for learning purposes, that it went up in a month and a half. It went up $10 in a month and a half. It was really bullish. Here's what I would do. I would take that 82.50 call that I paid 380 for, and if 45 days were to pass, or actually, no, you know what we could do? There's about 90 days difference. We could do this. Yeah, we can totally do this. Let's say 3 months pass, 90 days. We paid 380 at 82.50. If 90 days pass, which is about our window of time, the option is going to have the value of whatever the May option is right now because it has about a month worth of time there, 3 months less. So if the stock goes up $10, it'd be worth about $5.50. But look at the bid-ask spreads. They're huge. So if I go at the mid, that's almost $2 a buck. That's worth about $6.50. So our 380 is worth $6.50. It's not quite a double, but I think maybe a, ballpark 70-some% return isn't bad. So we can actually forecast out in time what these options could potentially be worth if we held it during a specific amount of time. I can say, all right, if I'm going to hold this for 90 days, that means there's going to be about 30, 40 days left. Just look what May is. And if the stock moved up $10, just go $10 down on the options chain and we have our number. Now, if it happens sooner than that, there'll be less time decay and we can potentially make even more, but we'll just use the average. Now, can you imagine if you guys are credit spread traders, or if you own stock and you're looking for weekly or monthly income opportunities? You could take this type of bias and say, oh my goodness, this stock goes up by a high degree of accuracy, 86%, 12.5% is the average move. I'm going to do a bull put spread. I'm actually going to go below where the stock is trading and do a bull put, because bull put spreads can make money in bull markets. slightly bullish markets, sideways, or even down a little bit. Just don't go below that threshold. So not only are credit spreads multi-directional and give you a chance to win, which is why professional traders like using credit spreads so much, multiple chances to win. There's only one direction that hurts you, and that's down. If we actually use the seasonality aspect, it can potentially increase our chances exponentially. Just make it so much better. So the seasonality thing is truly astonishing. Our members give us testimonials without even asking for them. What Renee is going to do, as I keep going here, is she's going to be kind enough to post in a link. And this link is going to let you test out everything at Financial for free, truly free. There's no credit card required. There's nothing to buy. You will get platinum access to everything. We call it the All Access Platinum Pass for the next 14 days. There's absolutely nothing to cancel. You don't have to even rate me. It just expires. It's sort of like the Mission Impossible. You know, this is going to self-destruct in 14 days. So there's no catch, I promise you. If you actually go to the page, this is what you're going to see. All we ask is your first name and email address, and put in, or click that green button, and you're instantly in. There's a lot of other cool features here on Financial. We can also use stock score. And what is really interesting is the buys and the sells. We know that Dollar Tree is now entering a really strong bullish period on a historical perspective. Notice that the histogram, which that's the easiest way to use stock score, the histogram has just gone green. So if we have a green histogram and we're above the $80 level, match made in heaven if you ask me, because if I show you Disney, look what happened on the stock score on Disney. Right when it went seasonally positive, that's exactly when the stock score also triggered. Now, I just got done telling you that seasonality is not proprietary. It's just the stock's own data. However, stock score at Financial is proprietary. We take into account technical analysis, charts, fundamental analysis, the fundamentals, sentiment analysis, and we then layer in seasonality. So like I mentioned earlier, if you caught it, I like when stock scores are on a sell and charts are in downtrends, because no one is paying attention. And the moment stock score goes green, the moment the seasonality starts looking good, I mean, I'm going to watch Dollar Tree. That sucker closes above 80, that's when I'll consider going long. And these patterns, they just keep repeating year after year after year. I could give you guys a ton of examples. In fact, the airlines were another one. Let me type in UAL. This was United Airlines. August, September, October, it was in an uptrend. And you know what we did? We did the screener. We went screen, we went seasonality, and then we started coming down here. And you know what happened? We saw United Airlines. Then we saw Delta Airlines. Then we saw American Airlines. And I said to the folks that were in the webinar, something's up. We just scanned the entire stock market and we just hit 3 airlines. Something tells me the airlines move this time of year. We went back to the chart. Some folks said, well, Ron, these things are already up like, 20% here in the last 2 months. I think maybe they ran early this year. Like, you might be right. Oh, what do I know? But what I can tell you is the data doesn't lie. The data is the data. It's unbiased. Let me remind you that it doesn't care what you think. As a joke, it didn't care what they thought, and it doesn't care what I think. Just the data. And November, that first week in November is when they turned positive. What did the airlines do? There goes United. Look at Delta. Look at American. And they specifically went wild to the upside for 45 days, right around that month and a half time frame. And then interestingly enough, Now, JetBlue was another one. It had a really nice move for a cheap stock. But check out January. Here's January. Over here, November, December. So JetBlue just explodes. It then starts going sideways. And we looked at JetBlue in January and we said, JetBlue actually goes negative, just like XHB. Even though, here, look at JetBlue's in an uptrend. XHB that I showed you at the beginning of the presentation, it is in an uptrend. And then all of a sudden it has earnings and it just gaps down. The folks that were part of financial could type in JetBlue and say, wow, this is so powerful. That stock went down over 10% and it didn't hurt me because I knew better. I knew that if I want to be long JetBlue, I better have some protection in place because typically it just goes down. And it was right on cue. Hit the numbers. All right. Something else I want to show you guys. So we've covered this, and remember, I saved my settings so you can see the different settings that we can have. You can always come to this page and within, 10 seconds, get what you need, and you can start hunting down your own trade ideas. But I showed you stock score, but we can also screen for stock score. How about this? What if you were looking for stocks that just went on a buy signal? So we're looking for stock scores 50 or above. We want stocks that have gone up between 0 and 3% in the last 10 days. We don't want the stock to go up too high, but we just want to see signals that have just occurred. And what do we see? There's actually just a couple here right now. We have Cargill, we have APC. What happens if we look for in the last, let's say, 3 weeks? Trying to get it perfect there. Okay. What if stocks that go up as much as 5%? Okay. What if we lower the stock score a little bit? Oh, if we lower it, we can get some other details. So this is important. You guys can actually filter for stocks within specific price ranges, stocks that are only on a buy, stocks that are only on a sell, minimum number of years trading history 10. So let's go back and just change this up a little bit. Let's do the last 10 days. We're going to make sure they're buys, buy 20 to 300. Now look, DaVita, Packer, Salesforce.com, Weyerhaeuser just went on a buy yesterday. It's only up 0.3%. So a lot of interesting stocks. There's also a covered call screener as well. You guys can go in here and actually scan for covered call opportunities. These can be stocks that you own. You can actually come in here and type a stock symbol. You can do specific searches. You can exclude weeklies or include weeklies. Look for strike prices that are near the money. Look for a specific range of stocks. You can even come in here and look for PE, market cap, make sure they're bigger companies. You can even exclude symbols. Let's say you hate finance stocks, nothing financial, nothing Forex. You don't like energy stocks, and you really hate the drug stocks. So we're going to type in the biotech index, Celgene, Gilead, and maybe you just don't like Google because it's so expensive. We can type all those into exclude and they're gone. Okay. All this for 14 days for free. So I want everybody that's listening, or if you're watching the recording, because Renee's been so kind to do that as well, grab this trial. We are going to be changing it up, that it's no longer going to be no credit card required. So it's truly 14 days free, no strings attached. The membership simply expires at the end and it goes away. You'll be given a special opportunity to get an annual membership as well. And if you actually sign up for the trial today, I haven't nailed the date down yet, but it's either going to be Friday or Saturday morning. I'm going to be doing a special webinar where we're going to take an even deeper dive into the financial software. So if you guys have any questions, please go ahead and ask. I'm trying to be very watchful of the time because I don't want to go over. We had a couple questions here. One from Roland, and it was earlier, and it was about, how accurate are the forecasts? You know what, Roland? I get that question all the time, and it's a fantastic question. If I go to search and seasonality, and let's just go to Dollar Tree, DLTR. And one of the dangers of doing a live screen share and using the site is it sucks up a lot of my juice. Roland, that actually is the forecast. That actually is the results. We get asked that a lot. Well, what are your results if you followed? Those are the results. It's not me changing them. It's not me being special. This is actually on stock movement. And my response is, can you actually imagine when you start taking almost $100 stock and having it move 10% or $10, what that could potentially do to an options trade? I want to show you guys something. I'm going to bring this over, and I have to update it because some other stocks that recently have moved are Penn and C-Trip and AMAT. But just check this out on Disney. Back in the end of October, beginning in November, if you actually go from October 27th, I did the math, an April 95 long call, which we were on record of saying, hey, let's have some fun with this. Let's follow along on paper. It cost $4.20. At the end of February, it was worth $15.45, and the stock is slowly churning higher. That means a little $420 options contract is worth $1,500. Not bad. How about the airlines? Check this out. When they began running November 1st, just into early December, which was the window of when the airlines typically perform the best, just at the money call options, just going out a couple months, UAL 264%, Delta 193, American 140. How about gold? Guys, gold has a fantastic track record right at the beginning of January, right into March. You know when it has a terrible track record? October, November, into the middle of December. It's clockwork. The accuracy is off the charts. Go back and do it. Go back and look for yourself. Or better yet, grab this free trial that Renee was kind enough to put in, and I'll see if I can type it in too. Let me see if I can. Entire audience. You guys should all be able to see this. Hang on. Let's try this. Try that. It's not letting me. Oh yeah, it is. Oops. Let me delete that. Send. Oh yeah, there it is. Okay, so if you guys copy and paste that link in, Scott, I know you said you're asking for it. Let me know if you see it. You get a 14-day free trial. No credit card required. How about Adobe? This is actually even better now. This was a little $7.10 option. Now, well, it was $12.40. You want to know something else? And I got to stop here in about 1 minute. The big game, right? We can't say Super Bowl. Oops. Here was Domino's Pizza. Let me go into a 6-month chart. Here's Domino's. If I did a vote right now, if you guys want to play along, who likes Domino's Pizza and who likes Papa John's? We're going to get 50-50 probably, right? And you're thinking Super Bowl commercials, Peyton Manning's going to be on there, maybe somebody else. Watch what these two stocks did. You see how Domino's rips up? What did Papa John's do? It ripped down. That's exactly what the seasonal data suggested. It said that Domino's will outperform Papa John's. Now, Papa John's had a slight seasonal positive bias, but nothing compared to Domino's. And what happened? Papa John's down, Domino's up. I call it the ultimate this versus that decider. Because if you take two stocks into the next day's trade, you only have so much money, right? Eeny, meeny, miny, mo. Well, now you can use the financial software and pick the one that has the better seasonal track record. It's like having the wind at your back instead of flying into it. So with that, I'm going to stop talking. I do not want to go over. Guys, I really appreciate you being here. I appreciate you guys asking questions. PK, you can use this for long and short ETFs as well, or flat out ETFs. And Roland, thank you for your question. Don, I think you're good. Scott, I think you're good. So Renee, thank you so much for having me in. It's been great to be here. And if anybody needs my email address, it is care, C-A-R-E, @financial.com.